Hello everyone, I hope you've enjoyed the session so far and I hope you find this topic also interesting. So I'm Johann Van Der Lith, I'm a regulatory specialist at the Financial Sector Conduct Authority and I'll be taking you through the regulatory framework in terms of crypto assets. After that, I'll give over to my colleagues, Andile and Michelle, and they'll deal with some of the cybersecurity elements and the client due diligence. So I'll start off taking you through some of the policy developments. So as you'll see on the screen, in 2016, the Intergovernmental FinTech Working Group was established. So the purpose of that was for the regulators to get together and better understand the FinTech and other innovation developments locally in South Africa. Also, for the regulators to be more proactive in assessing the risks, but also the potential benefits that emanates from the new technologies that are being used. And the IFWG orchestrated the working group specifically focusing on crypto assets, the COFI, if you're familiar with that. And the COFI published 3 papers. The paper in 2019 was a consultation paper on crypto assets. That was followed by the draft position paper in 2020 and finally the final position paper in 2021. So the final position paper built on what was in the consultation paper. The consultation paper contained the risks and benefits that was viewed that exist in South Africa in terms of crypto assets, and then also some policy proposals on how the regulators should deal with crypto assets to bring them into the regulatory framework appropriately without stifling innovation. So if you look there on your right-hand side, you'll see some of the risk activities that was identified in that paper in respect of buying or selling crypto assets. You'll see money laundering and terrorism financing, exchange controls, circumvention risk, market conduct risk that I'll be speaking to you today about, and also advice and mis-selling risk, fraud and operational risk, including cybersecurity risk, where my colleague Andile will come in a little bit later on. So what can you take from that position paper? What you can take from that in terms of our discussion this morning is that there's several principles that was communicated through that paper. First, that crypto asset service providers should be in the regulatory remit. They should be regulated appropriately. Again, appropriately not to stifle innovation, but address the risks that emanates either existing risks that we see in other traditional financial products or risks that emanates in a new way from this use of these technologies. Principle 2, apply an activities-based approach, proportionate regulations, maintain collaborative and joint approach, because much of these activities span across regulators, and it's necessary for regulators to discuss these issues together and work together to find solutions in terms of regulatory frameworks. And then also to continually proactively monitor the dynamic development of crypto asset and crypto asset service providers. As we all have seen, it's very dynamic, it changes quickly, and it's necessary for the regulators to be have their hand on their heartbeat to understand how these changes happen and to make proactive decisions to ensure the customers are protected. And then lastly, to increase digital literacy and digital financial literacy levels. With all this digitization, it's necessary for all the consumers to understand these digital provided products better and have better digital literacy levels. So on this slide, I'll speak to you a little bit more about the declaration of crypto assets as a financial product. Within those proposals that we found in the COFI paper, there's 25 recommendations, and specifically relevant to this conversation is recommendation 9.1. So recommendation 9.1 stated that as an urgent interim measure, the FSCA should bring crypto assets within the regulatory purview by way of the FAIS Act as primary legislation and regulate crypto asset service providers as far as it relates to financial services, which is advice and intermediary services. Why did we do this? Besides the paper proposals, there was also an exponential increase that we've seen locally in the use of crypto assets for different utility purposes, but mainly for investment purposes. And there was a rapid growth. So just some statistics there. In 2020, November, there was reportedly 12 crypto asset platforms operating in South Africa. you'll see there was an estimated 800,000 users with quite a large assets holdings of 6.5 billion rand. And this was part of the reasons why the step was necessary to protect the consumers against abuses that was seen. Some of these abuses were very public, and you might be aware of them, and others were smaller abuses that was picked up by the FSCA and the IFWG through their research work. So in 2019, there was the FATF country review findings. I think a lot was said this morning regarding that, so I won't go into detail on that. But recommendation 15 spoke about virtual assets and how it's necessary to have a regulatory licensing supervisory framework. And that also motivated the step as an interim step. And I just wanted to mention as an interim step, we used the existing legislation. So we had to do an analysis on what of the existing legislation is appropriate to apply to crypto asset service providers, because it's not bespoke legislation at this point. And the future framework will be drafted in a more bespoke way so that you can address the nuances that you find in these type of activities. So in 2021 and 2022, there was a lot of further policy work that the FSCA conducted. We did some information requests in April, 12 April 2022, there was an information request, and that was sent to all the existing FSPs. So the reason for that was to understand the local landscape in terms of the licensed service providers, to understand what are the exposure, what do we feel the clients feel about investing in crypto assets, using crypto assets, how would the scope be broadened? So we gathered all that information. And also we did a lot of work in analyzing the appropriateness of the FAIS framework as the existing framework. On top of that, there was responses from the FATF mutual evaluation report, and that there was no requirements for virtual asset service providers. So looking at the definition of FATF about virtual asset service providers is very similar to what we call crypto asset service providers. Some of the terminology differs across the jurisdictions, but we've analyzed that to be very similar. And then there's the Conduct of Financial Institution Bill that's being progressed, and that will contain the future framework, which is a comprehensive legislative instrument across the different financial sectors. And international developments, as you might be aware, there's a lot of jurisdictions that move towards bringing crypto assets into the regulatory purview. They use different methods, classify some of the crypto assets perhaps differently, depending on how their local legislation reads and the definitions and all those technical details where crypto assets, the different crypto assets would fit within their existing legislation or create bespoke legislation specifically for that. And what we see on an international front from the standard setting bodies is the messages are clear. It's necessary for jurisdictions to step up and bring crypto assets and other fintech-related activities into the regulatory purview. It's very important, but it's also important to be appropriate in that and take a staged approach to make sure that you don't hinder innovation while you protect consumers. And I'm speaking obviously mostly from a market conduct point of view as the FSCA. So October 2022, 19th October, we published by way of Government Notice 1350 of 2022, we brought crypto assets within the primary legislation, the FAIS framework. So as you know, the FAIS framework was enacted specifically to regulate certain financial advisory services and intermediary services to bring protection to the customers when those services are being rendered. You also know that intermediary services, that definition is cast very wide. So a lot of the activities fall within that definition. Crypto assets, you'll see there's the definition on the screen. It's a digital representation of value. It's not issued by a central bank. It's capable of being traded, transferred, or stored electronically by either natural or legal persons. And it's for payment, investment, and other forms of utility. So that part is mentioned because the function of crypto assets are so dynamic. It can initially be purchased as an investment. It can now be transferred within 5 minutes for payment purposes, for instance. So that is a very dynamic use of crypto assets, and that's why we captured it with all three of those the payment investment, and the broader utility term, and applies cryptographic and distributed ledger technology. So we included both of those technologies, and then it falls within the definition of crypto assets. So what is the effect of bringing crypto assets within the FAIS framework? The effect is that any person that provides financial services, advice and intermediary services, must be licensed and authorized as a financial services provider following the transitional period. And that includes crypto asset exchanges, brokers, and also advisors. And as I said, it's an interim step because we've seen this increased risk and harm. And when the COFI Bill comes in, then the FAIS Act will be repealed. So it is just an interim step using this existing legislation. I'll just quickly touch on the type of crypto assets that's included. As you've seen, that definition is very wide. So it doesn't cater for specific type of crypto assets, whether it's backed, unbacked, exchange tokens, utility tokens, security tokens, even non-fungible tokens is included in that definition. However, non-fungible tokens is excluded by way of exemption, and I'll just touch on it in one of the other slides. I've mentioned a couple of times that it's about the financial services. So token issuers themselves, for instance, somebody that issues a stable coin in a closed market loop is not necessarily captured within the FAIS framework if that is the only activity that they perform. There's a need for granular analysis, and that's where the complexities comes in. You may think that you're not actually need to be licensed, but you'll need to undertake a granular analysis to find out whether any of those services beyond the issuing can actually be captured within the definition. I mean, intermediary services includes managing, administering financial products. It's very wide. So there may be some of the services that you think is not captured, they may be captured. If there is any questions about it, feel free to contact the FSCA. We can have a conversation, look at it a bit more granularly, and then guide you as to whether you need a license or not in those cases. So we'll look at a bit of the licensing and exemption for certain participants. So as you might all be aware, there was this exemption, and it provided for a transitional period until the 1st of June 2023, which is coming very closer. So we're seeing a lot of queries from different participants in the industry as to the licensing process as well. So we're almost there, 1 June 2023, and then up until 31st November 2023, all these license applications must be handed in. So we've given this transitional period, but subject to certain conditions. One of the conditions is that you have to comply with Section 2 of the General Code, which is, of course, the subordinates legislation under the FAIS Act, immediately, and that means rendering financial services honestly, fairly with due skill, care, diligence, and the interest of clients, and the integrity of the financial services industry. So it's quite a long sentence. It encapsulates quite a lot of things, and that is just to provide immediate protection in terms of some of the abuses that's seen in the market. And there's also another condition that the crypto asset FSPs must provide the FSCA with information that the FSCA requested. And so we did subsequently to that issue information request then to the crypto asset FSPs that's subject to this exemption before licensing to gather further information about the landscape. So we're being proactive and making sure that we understand the local landscape very well as we go along, and it's very dynamic and it's changing every day. So the exemption of persons renting certain types of crypto asset financial services was also included in that exemption that was published. Because of the definition of intermediary services that's very wide, and also the definition of crypto assets, a lot of the ecosystem participants are captured within those definitions, including mining nodes and other node operators. So as you know, mining nodes, you get very small operators where it's a single person that's providing infrastructure in terms of these systems, or you get very large operations, and you also get that locally. But internationally, most of the focus of the regulators was on the environmental side. And that was where the focus was not really on the activities in terms of customer protection. And we've seen a lot of changes happening recently, like the Ethereum merge that changed from proof of work to proof of stake, which have an effect on how many mining nodes actually operate and get rewards for their activity. So it's a changing landscape, and we felt that it was not reasonable to impose all the FAIS requirements on these eco-participants that provide integrity and security and infrastructure into the system. So they are exempted at the moment. And also non-fungible tokens. If you render financial services only in respect of non-fungible tokens, which is a unique identifier, proof of ownership, then you do not have to be licensed because you do not fall within the FAIS Act by way of this exemption. But that can change. It's by way of exemption that can be withdrawn at any time. The reason why we did that locally is that we saw that it's still quite in its infancy. Although there are use cases, most of it refers to digital art and also gaming items. And again, it's perhaps not reasonable to apply all these requirements looking at the low consumer risk. But we are monitoring the developments to see whether it's necessary at one point to bring in non-fungible tokens as well. So I'm just quickly going to touch on the regulatory framework that's applicable to crypto assets FSPs. So you would have seen with the declaration there was 2 exemptions published. One was an exemption, a general exemptions in terms of these licensing requirements that's contained in Section 7.1 of the FAIS Act. And then there was a second draft exemption that was open to comment, and that was in regarding which provisions the FSCA feels can be made applicable. Which of those are general in nature, it's principle-based, and it applies evenly whether it's traditional financial services or crypto assets. It's equally important for consumer protection. So the first of what was published is in regarding with the FAIS Act. So if we look at that primary legislation, it's largely enabling. It provides for administrative matters. So it's not really a problem to apply those requirements because it doesn't apply directly to the financial services providers. There's some exceptions to that. If we look at the licensing in Chapter 1, the representative requirements in Chapter 3, and the duties of FSPs, which includes compliance officers and maintenance of records in Chapter 5 of the FAIS Act. But the rest, administrative enabling. If we look at the subordinate legislation, the Code of Conduct and Fit and Proper, from a Code of Conduct perspective, we had a look and done our analysis, and it's mostly product agnostic. So that can apply to crypto assets similar to traditional financial products. There's some general requirements in Section 2, and that speaks to the honesty, fairness, due skill, and diligence, and those are really important to be applied to these type of services as well. There's disclosure, conflict of interest first, and that's contained in 3A of the Code of Conduct, and those are also equally important when it comes to mitigating a conflict of interest with these type of activities. Then we have disclosure requirements. Those disclosure requirements are provider and also product disclosures, and these disclosures are necessary for the customers to be informed about what products they are entering into with what terms and conditions. So we feel also that that can be included. The advice and complaints, that's very universal, and we've also included that with crypto asset service providers. There's an exemption from the professional indemnity requirement. One of the reasons for that is that we were uncertain whether there would be appetite, looking at all the international developments and also locally and the volatility of certain crypto assets, like say exchange tokens, whether practically it would be able to get cover in this scenario. And there is also some other FSPs, as you know, that have been exempted from this requirement, so we didn't feel that it was necessary to impose this at this stage. If we look at the fit and proper requirements, it's mostly general in nature and product agnostic. You have for honesty and integrity requirements, operational requirements, financial soundness, and that is all very principle-based requirements. And we felt when you look at the competence and CPD requirements, as you know, that's product specific when it comes to FAIS, that we needed to provide some exemptions in that. So we're very close to the licensing stage, and the final exemption would be published following all the comments that was processed. And operationally, we're getting ready for that licensing process, making sure all the forms are ready, and also the online options for licensing, that can facilitate any applications that's received. So we're making progress to move towards the date of 1 June. Before I go into the Conduct of Financial Institutions Bill, the future framework, that's the last slide that I have. I just wanted to mention, so during this process of declaring financial products, crypto assets as financial products, there was a consultative process. There was a lot of research, and I touched on that, but I also wanted to mention that we considered all the comments and made some necessary changes. Some of the comments that was received was, for instance, in terms of the definition, that the definition that was adopted by the KWG that was in the draft declaration captures also digital reward programs, and may have unintended consequences. So there was a change to bring in distributed ledger technology within the definition as well. And that largely solved the problem that was raised by some of those commentators. There was also some comments on legality, because of course we did this declaration in terms of section 1(1)(h) of the FAIS Act, which speaks to similar that the product must be similar to other traditional financial products. But there wasn't a lot of strong arguments as to why crypto assets are so unique that it cannot fit, at least partially, within some of those existing products and how they are framed. So we did our own analysis and found that there is enough similarities, looking across a different type of crypto assets to bring it into the FAIS framework. And lastly, there was also quite a bit of questions on licensing and processes, and that was addressed by publishing this draft exemption to show what we believe is the relevant provisions that should be included for crypto asset service providers. So on this slide, Conduct of Financial Institution Bill, I've mentioned that it's a very comprehensive, consolidated, consistent regulatory framework that applies to all financial institutions across the financial sector. So one of the purposes of this Conduct of Financial Institutions Bill is to make sure there's a consistent level of consumer protection across the different sectors that's within the financial sector. And it repeals the FAIS Act, as I've mentioned. It also contains a definition of crypto assets that's very similar as the one that's in the FAIS Declaration. And already in the draft, you can see that the crypto asset activities are included in the licensed activities that's proposed in the COFI Bill. Services related to crypto assets are included, include sales and execution, advice, general admin, crypto asset custodial services. So all of those activities would be captured in the COFI Bill once it's enacted. And under the COFI Bill, it's possible for the FSCA to bring out conduct standards that's tailor-made and specific to the risks that's identified within these activities. And you'll see also the definition of financial services in the COFI Bill includes crypto asset custodial services. So that's from my side, just a broad overview. I think if there is a specific licensing question from a process perspective, we have a licensing department. I think we are seeing, as we come closer to the licensing stage, that there's quite a lot of queries and small uncertainties that the industry wants to clarify. And feel free to contact the licensing department. You can also email myself with any questions. If the question relates, for instance, to I'm providing this service, I'm not sure if it's going to need me to apply for a license. If it comes to those technicalities, feel free to email me and we'll have a discussion, look at it granularly, what services are you offering, and then we can advise you whether we believe that you would require a license. But I think that's all from me. I hope I did it in good time.
Question. Yes. Class of business.
Yes.
Where is that within the first?
Well, we're busy finalizing all those administrative issues, so you can definitely contact the license department. But how it's going to work currently is that you have all the different categories, and this will be a subcategory that you add on the category that you are licensed for. So even though you have an existing FSP license, if you're performing services relating to crypto assets on that specific category, for instance, category 2, then you would need to add the subcategory to that.